No, is now the time to buy tech, especially with NVIDIA's make or break earnings just days away. Now, lately, NVIDIA has been driving over 10% of tech sector returns and nearly 6% of the entire S&P 500. I'm Jared Blickery, host of Stocks in Translation. Check out this chart here. Relative strength and NVIDIA. This is against the Spider XLK. So NVIDIA divided by XLK. From 2016 through 2023, NVIDIA was tech's unstoppable force, riding the AI wave higher. But notice the shift over the past year. The ratio has flattened out. Those pink dots, those are earnings dates. And the last four reports did not create new highs in relative strength as they have in recent years. So the question for investors is NVIDIA losing its edge? Now let's take a look at correlation, how closely tech tracks NVIDIA. At 0.85, and it only goes up to 1, this is near the highest level since the AI boom kicked off. Tech stocks now move in NVIDIA's shadow. That means if NVIDIA misses, the whole sector feels the pain. And if you're underinvested, when NVIDIA soars, you miss out big time. So combine both of these charts and you can clearly see stalling leadership and sky-high correlation. They spell asymmetric risk ahead of the earnings print. If NVIDIA delivers a blowout, then tech likely moves higher, but the gains might not be broader. So if NVIDIA disappoints, expect tech stocks to drop in lockstep. The bottom line for investors, short-term traders might scale in or hedge ahead of the report, but longer-term investors, ask yourself, is NVIDIA still the engine of tech, or has it turned into a potential liability? We'll find out next week. Tune into Stocks and
Earlier this year, investors' concerns about the impact of tariffs and export restrictions on NVIDIA's sales caused the company's shares to plummet. However, as the Trump administration repealed the AI diffusion rule from the Biden era and hyperscale cloud providers increased their capital spending projections, the stock recovered its losses in May. On the other hand, another turning point is approaching. After the market closes on Wednesday, May 28th, NVIDIA will release its fiscal 2026 first quarter financial results. Following earnings events, the stock has frequently experienced volatility. It dropped by over 8%, for example, after the last report. However, Wall Street offers investors unambiguous guidance. With a median target price of $160 per share and a consensus rating of buy among the 71 analysts that follow the company, NVIDIA's stock is expected to rise 22% from its current share price of $131. Here are some things investors should know about NVIDIA. NVIDIA is a company that specializes in accelerated computing, which combines specialized hardware and software to speed up complex data center workloads, like artificial intelligence, AI. The company is best known for its graphics processing units, GPUs, chips known as AI accelerators, and according to IoT Analytics, holds a market share of over 90% in data center GPUs. However, the company's ability to complement its GPUs with related hardware, such as CPUs, interconnects, and networking equipment, effectively creates entire data centers, according to CEO Jensen Huang, makes it possible for NVIDIA to build systems with the lowest total cost of ownership. NVIDIA has also invested roughly 20 years in developing its CUDA software platform, which now consists of hundreds of code libraries, frameworks, and pre-trained models that assist developers in creating AI applications in a wide range of domains, such as video analytics, speech recognition, recommendation engines, and customer support agents. Crucially, although demand for NVIDIA's accelerated processing products has recently been driven by generative AI capabilities, the firm is well positioned to hold on to its dominant position into the next stage of the AI revolution: autonomous robots and self-driving automobiles. Jensen Huang believes that the next industrial revolution will be brought about by physical AI and robotics. NVIDIA Drive and NVIDIA Isaac are platforms that assist the development of self-driving cars and autonomous robotics, respectively. We build technology that almost every self-driving car company uses, Jensen Huang stated earlier this year. Tesla and Waymo from Alphabet are on that list. Similar to this, Amazon trains, models, and controls their warehouse robots using NVIDIA Isaac. Crucially, earlier this month, NVIDIA unveiled GR0T N1.5, a customizable foundation model for humanoid reasoning. CFRA analyst Angelo Zeno thinks GR00T will reinforce NVIDIA's position in the AI ecosystem, and that the company's recent decision to open its NVLink interconnect technology, which combines disparate chips into a single accelerator, to custom chip makers like Marvell and MediaTek, will open up new revenue growth opportunities. On Wednesday, May 28th, NVIDIA will release its financial results for the first quarter of fiscal 2026. The company projected a 53% increase in revenue and a 49% increase in non-GAAP, non-generally accepted accounting principles, earnings growth. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
The street is expecting a lot from NVIDIA for this report. Of course, the last of the Mag 7 to do the reporting. As far as EPS, the consensus is 86 cents, which would be a year-over-year increase of roughly 42%. Revenue, they're expecting to come in at about $42.71 billion. That would be up 64% year-over-year from Q1 of last year. And then their other big driver, their data center revenue, expected to come in about $38.48 billion. So also up more than 40% year-over-year. The street looking for big things out of NVIDIA. But of course, they're also watching to see what these tariffs are doing, what their guidance is going to look like. And of course, Jensen Huang making headlines this week, speaking at that conference in Taipei, where he called the U.S. chip policy a failure.
Yeah, and I mean, obviously he's been making the rounds. He was in Mar-a-Lago, he was in China. He did beg the administration to lower some of those restrictions. I think the administration did do that. Some of those that actually were from the prior Biden administration. But the tariff story still remains. And we did have some talks with China today.
We did, yeah. I mean, what we know, at least from the company itself, is that Jensen Huang is saying that the current policies as they stand have knocked their China market share from 95% down to 50%. So that's a huge hit. A lot of people are going to be waiting to hear just exactly how that's impacted them. He has said it's cost the company $15 billion in sales so far, but what that looks like for guidance, I know a lot of people are waiting to hear. And then the chip policy itself, when they banned, Trump did remove some of those policies from the Biden administration, but some are still there. And the ones that are still there are causing the company to take a $5.5 billion charge over that issue. So lots of big numbers, lots of loss of share. Jensen Huang being very clear, saying that if the U.S. doesn't rethink its approach, he thinks that we could lose the global edge in the AI race. So a lot of ears on this call, a lot of eyes on this call. And as we already know, Nicole, when NVIDIA does anything, makes headlines or does a report, they tend to move up the markets.
Yeah. And then, I mean, the analysts still seem to have, I see longs and buys. I mean, there's still a lot of positive comments, right?
Absolutely. I think in general, the support for NVIDIA and the report is going to be bullish. Several of the analysts I've spoken to have said, in fact, that they think the consensus estimates are actually a little bit light and they expect them to post a beat, maybe even over the expectations of across the board. So for the last 4 quarters, they have beat consensus EPS all 4 times. So I think historically they've beaten, and I think they expect that again for this quarter too, Nicole.
All right, Marley Caden, a great preview for next week, folks. We're getting ready for that. Thank you.
However, a number of analysts have lowered their projections in the past 90 days because of worries about tariffs and export restrictions. NVIDIA's earnings are expected to rise 44%, according to the Wall Street consensus. Crucially, surpassing that figure does not always ensure a favorable market response. Although NVIDIA's fourth quarter earnings above both top and bottom line projections, the stock dropped more than 8% the following day. This time, investors should anticipate comparable volatility. The options market's pricing data now suggests a 6-point swing, which indicates that the market anticipates the share price to fall between $125 and $140. Investors should read a transcript of the event or listen to the conference call. There are too many unknowns to be certain of a positive reaction, so investors who intend to hold the stock for several years can buy a small position today. If the price drops post-earnings, consider adding a few more shares. However, investors looking for a quick profit should avoid the stock. Jensen Huang will almost certainly discuss important issues such as Chinese export restrictions, recent deals in the Saudi Arabian market, and what the company expects in terms of semiconductor tariffs that President Donald Trump has yet to finalize. Bank of America reaffirmed its buy recommendation for the stock. Going into next week's earnings, the company feels optimistic about the stock. Wall Street anticipates that NVIDIA will announce quarterly revenue of $43.38 billion, 66% more than the previous year, setting a new record for the company. Adjusted net income is predicted to increase from $15.24 billion or 61 cents per share to $21.29 billion or 87 cents per share from the same time last year. Given its distinct leverage to the global AI deployment cycle and the potential for China sales to rebound on new redesigned, compliant products later in the year, we continue to recommend buying NVDA despite these short-term challenges. The stock presently has a consensus buy recommendation from Wall Street analysts. The street high target of $235 suggests an upside of 79.69%, while the average price target of $160 suggests an upside of 21.8%. Nowadays, data center GPUs used for artificial intelligence, AI workloads, account for the majority of NVIDIA's income. The data center segment generated $35.6 billion in sales during the fourth quarter of fiscal 2025, whereas the gaming section only generated $2.5 billion. It makes sense for the company to give its data center business top priority given the insane surge in demand for AI accelerators and NVIDIA's total dominance of that industry. But there's a drawback. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Hey, Nicole. Yeah, I do. As Marley pointed out, there's several metrics here that could influence price action next week as we get towards that earnings announcement. So when I looked at trade examples today, the one thing that came to mind immediately was risk definition, as again, the uncertainty surrounding these earnings, but able to capture further upside if we're able to hold on to these levels and build from the selling pressure today. So today's trade example is just a call spread in June, buying the 130, 140 call spread. You could put that on for about $3.75 at 129.5. It's a little bit more right now, but nonetheless, able to capture return towards the recent highs, maybe even further elevation from there, but also define risk should these earnings announcements come in and be a little bit disappointing.
Okay. How do you feel about the market action we've been seeing?
Well, volatility continues to persist on both the upside and now on the downside. Not surprising to see the VIX back over 20, given the fact that we continue to realize significant moves intraday and day over day. Now, remember, a VIX of 16 basically implies on any given day over the next 30 days a move of 1%. We're experiencing larger moves than that, so it's not surprising to see the VIX hold at these in this low 20 level and see that VIX futures curve flatten out. I think there's still a great deal of uncertainty, but overall, it does appear to me, Nicole, that even with some of this bad news that we've received the last couple of days with the bond auction results and now this, there is buying pressure under this market. So ultimately, it does appear that if we're able to get through some of these minor disruptions, now the bond market could be a major disruption later in the year, but I think this negotiation tactic thing that we're continuing to see unfold, the market's getting more and more of a sense that, it will come to some resolution that shouldn't impact valuations too much. Now, the flip side of that would be the debt structure, and that's still an overhang for this market longer term.
Yeah, and that's what I was going to mention. I mean, I see the bond yields creeping up today. Now we're
they are, aren't they?
On the 10-year. I mean, just this morning, since we came in, and that's one story there. But at the same time, Goldman Sachs has what, a 6,500 target for the S&P for the year end. There are folks who still see the S&P at 6,000 by the end of the year.
Yeah, I mean, you got various houses on both sides of that coin right now. But as we made it through some of the disruptions in March and April, you are seeing several of these agencies and rating agencies or big houses shifting their tact and reducing the idea of a recession, but ultimately, I guess there's still some a significant amount of uncertainties as far as, again, the biggest one being the debt structure. Certainly it's discussed heavily, but rightly so. And, if we continue to see yields hold here and move higher, that's going to be a headwind for the market. I think that it would be a challenge for this market to get back to those levels that we did see early in January, February, if we continue to see yields creep higher.
What's interesting is I just saw this headline, and while it's not the most important headline, it's interesting to me because it says Ethereum surpasses Bank of America in market cap, and how Bank of America has existed for more than a century, and Ethereum has outpaced it within a decade. We've seen Ethereum up 30-40% in 1 month. I mean, crypto is something that people have renewed interest in, Dan, right?
Yeah, absolutely. And I guess, if you really want to build on that theme, the idea of getting rid of the penny is another incremental move towards a digitization of currencies. And so I think that, we're seeing those incremental steps, and we're seeing a Bitcoin and crypto as an asset class continue to evolve. That's been the theme really over the last 10 plus years. It certainly has liquidity issues and things of that nature it's had to get through, but you continue to see the evolution of the space. And I do think longer term, you're going to see crypto continue to, again, capture market share, become a viable alternative, maybe to gold, not yet, but maybe at some point, as well as, digitization of currencies. So I think that, these are the incremental steps that, that people are looking for short-term answers. And because certainly the volatility in the space has captured our imagination and attention. But I think longer term, it will continue to evolve, similar to what we did see in the late 90s, early 2000s, with the evolution of some of these stocks that are now leading the market. It just takes many, many years for these things to come to fruition.
NVIDIA's gaming GPU division isn't receiving the necessary attention, which might cause rival AMD to lose a sizable portion of the market. Producing reliable, strong hardware is just half the fight. Software drivers that guarantee optimal performance with few issues in a variety of both new and old games are also necessary for gaming GPUs. Intel's initial attempt at discrete graphics cards mainly failed due to buggy software. It appears like NVIDIA is currently making the same mistakes. This year, NVIDIA drivers have been the subject of several reports of instability, crashes, and problems. The problem has only become worse with the recent release of the RTX 5060, a mid-range graphics card with a starting price of $299. Reviews of the RTX 5060 have been a little less than stellar thus far. NVIDIA's driver problems will make it difficult to sell the inexpensive graphics card. The new graphics card crashed, had significant frame rate reductions, and had other performance issues, according to Rock Paper Shotgun's evaluation of the RTX 5060. Performance would occasionally suffer if NVIDIA's AI-powered DLSS frame creation capability was used. The DLSS issues are especially embarrassing because NVIDIA has been actively promoting that functionality to increase perceived frame rates in games. The scant 8 GB of VRAM that are included is another issue. According to TechSpot's evaluation, the RTX 5060 struggles in several titles at higher resolutions and occasionally loses against last-generation cards with larger VRAM. As AMD prepares to release the Radeon 9600 XT, TechSpot referred to the RTX 5060 as dead on arrival. On June 5th, AMD intends to release the Radeon 9600 XT. There will be two models available, a 16GB model that costs $349 and an 8GB model that costs $299. Even while the less expensive model will experience some of the same issues as the RTX 5060, gamers on a tight budget who want to upgrade might find the 16GB model to be a significant winner. AMD is trying to gain market share, and NVIDIA's driver mess is a gift to AMD. NVIDIA has a lot to lose because in the third quarter of 2024, its market share for GPUs reached 90%. Based on the unfavorable evaluations, the RTX 5060 won't seem all that appealing to the large number of PC gamers who still use outdated NVIDIA GPUs. Gamers may not be persuaded to stick with NVIDIA if AMD's 9060 XT performs better in reviews. Even significant losses in market share in the gaming sector won't have much of an impact given the amount of money and profit that NVIDIA's data center GPUs are bringing in. For AMD, which has been dealing with dwindling gaming revenues, it would be a far greater concern. AMD may see a significant increase in income this year if it can capitalize on NVIDIA's seeming lack of enthusiasm in the gaming industry. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.